Uncertainty this morning with the economy and those of you with 401ks and your portfolios. So what should your strategy be with concerns over a possible recession or the impact of tariffs? Financial expert Corey Reamer with the Welsh Group joins us now to help you maybe navigate the market uncertainty, if you will. Good to have you with us this morning.
Hey, good to be here.
There is a lot of angst right now, especially among investors right now, but you got to be careful depending on where you are. Like if you're close to retirement, you should probably already have a strategy to protect against what's happening.
Yeah, absolutely. You should have been planning for this. Adjust your portfolio to where you are in life, what your goals are. You're about to retire. You should have already moved a little bit out of equities and more into fixed income, started to protect some of that principal. But everybody needs to look at their situation, like you said, individually, because if you're younger, you've got a long runway to go to continue to allow for some growth. Stay invested. These markets have downturns. There's usually a pretty good chance that these things are going to rebound over the long run.
A short-term investor, they're going to add volatility, right? But most people out there, they just got retirement accounts. So how do they stay calm during this?
Well, I think the main thing is just be disciplined. Don't listen to the noise as much. Don't listen to what's going on. You stay invested as long as you possibly can. The market is trying to digest what's going on. There's a lot of news out there. There is a lot of noise that's happening. Traders are trying to figure out what this means for the economy. Is this going to be good or is it going to be detrimental? And everybody's just trying to figure it out. If you're trying to time the market, usually you miss out on a lot of the upside swing after we've had some downside. And it's hard to get back in. You sell out because you get a little bit emotional, and then you're waiting for that moment to kind of get back in. Well, you might miss out on that upswing, and now you're like, hey, the market price is higher than where I sold out of. I'm going to wait till it comes back down. You might miss out on a pretty substantial return.
And what about the advantages? If you are every week, every paycheck, some of that money is going to your 401k. What are the advantages when the market's down?
Well, it's a great buying opportunity, but the good news is when you do that, you're also dollar cost averaging every single month. As you've got money going in, you're buying those securities at new prices. So that helps level out either lower prices or higher prices, whatever. It's just whatever the market is. And you just buy in as you've got money to invest that you're not needing for immediate liquidity. That helps level out your cost over time. And then it can also help you when you do need to sell something. You've got different lots of investments to sell.
So is it a bad idea to check your portfolio?
Yes,
your 401k
I know what you're going to ask. Absolutely. Don't look. If you're sitting here and you've got a long runway, you've got a long way to go, don't sit there and check it every single day. It's going to cause you a lot of heartburn, a lot of stress. Have a plan. Stick to that plan. If it's long term, stick to it. Just keep putting money in. The market historically has always recovered from some down markets, but if you're watching it, especially when you start hearing some of this bad news, you're going to really have a hard time sleeping at night.
All right, great perspective and analysis. Corey Reamer with the Welsh Group. We do appreciate it.
Hey, appreciate you.
All right, we'll be right back.